2 weeks, that's all it took. Bitcoin's mining difficulty crashed 11% and then exploded back up 14.7%. In 2 weeks. The entire global Bitcoin mining industry was just flipped upside down, and most people have no idea what this means for their money. I'm Asian Guy, this is Asian Bitcoin Guy, and today I'm about to break down why this single number, 14.73%, could determine which miners survive 2026 and which ones go bankrupt. Stay with me, because what happened this February is something we haven't seen since 2021, and it's not over. The setup and story, relaxed but engaged tone, storytelling mode. Alright guys, welcome back to the channel. If you're new here, I'm Asian Guy, and on this channel we break down Bitcoin, not just the price, not just the hype, but the real mechanics, the stuff that actually determines where this market goes. And today we're talking about something that most mainstream crypto YouTubers completely ignore. Bitcoin mining difficulty, and specifically the absolutely wild 2-week swing we just witnessed in February 2026. Now before I get into the numbers, let me make sure everyone watching understands what difficulty actually means. Because if you don't understand this, none of the rest of this video will make sense. Bitcoin is designed to produce one new block every 10 minutes. That's the target. Not 8 minutes, not 12 minutes, 10 minutes. To keep that pace consistent, the Bitcoin protocol automatically adjusts something called mining difficulty every 2016 blocks. That's roughly every 2 weeks. If miners are solving blocks too fast, meaning the average time is below 10 minutes, the difficulty goes up. It becomes harder to mine. If blocks are being solved too slow, above 10 minutes, difficulty goes down to make it easier. This is the heartbeat of Bitcoin. It's the self-correcting genius of Satoshi's design. Now here's where our story begins. On February 7th, 2026, at block height 935,424, Bitcoin's difficulty dropped by 11/16%. That's a massive drop. In fact, it was the biggest downward adjustment since 2021. Specifically since China banned Bitcoin mining and half the network went offline overnight. So when you see an 11% difficulty drop in today's environment, that's not normal. Something serious had to happen, and something did happen. An Arctic storm hit the United States. A brutal record-breaking cold wave swept across large parts of America, and US-based Bitcoin miners, who now represent a huge chunk of the global hash rate, started turning off their machines. Now, you might think that's crazy. Why would miners turn off machines that are making them money? But here's the thing. It's actually more complicated than that. Many large-scale Bitcoin mining operations in the United States have special agreements with power companies and grid operators. These are called demand response programs. Basically, during extreme weather events, when electricity demand spikes, everyone's running heaters, factories are consuming more power, the grid gets stressed, and mining facilities, which can consume hundreds of megawatts of power, agree to curtail their operations temporarily to ease pressure on the grid. In return, they often get financial incentives or better long-term energy rates. So when that Arctic storm hit, US miners voluntarily, or in some cases contractually, shut down large portions of their operations. The hash rate dropped. Blocks started coming in slower than 10 minutes. And 2 weeks later, when the difficulty adjustment came, it recalibrated down by 11/16% to compensate. Makes sense, right? The network adapted. But here's where it gets wild. The storm passed, temperatures normalized, and miners didn't just come back online. They came back with everything they had. Machines that were cold and offline fired back up. New machines that had been waiting for the right moment were switched on. Operators pushed their facilities to maximum capacity, and the global Bitcoin hash rate didn't just recover, it exploded past 1 zettahash per second. That is 1 million peta. Hashes per second. That is an almost incomprehensible amount of computing power pointed at the Bitcoin network simultaneously. And what happens when you have that much hash rate suddenly flooding the network? Blocks start coming in fast, way faster than every 10 minutes. We're talking 8 minutes, 7 minutes, sometimes even faster. The network was producing blocks at an accelerated pace, which means the next difficulty adjustment was going to be a big one. And on Thursday, February 19th, 2026, at block height 937,440, it hit. Bitcoin's mining difficulty increased by 14.73%. Not only did it reverse the 11.16% drop from 2 weeks ago, it completely canceled it out and went beyond it. In one adjustment, the entire discount miners had enjoyed was gone, and then some. The deep analysis. Now let's talk about what this actually means, because this is where most videos stop. They give you the number and move on. Not here. On Asian Bitcoin Guy, we go deeper. First, historical context. The last time we saw a difficulty increase of this magnitude was back in 2021, specifically on May 13th, 2021, at block 683 for 124, difficulty jumped 21.53%. And you know what caused that? China's Bitcoin mining ban. When China kicked out all its miners, hash rate crashed. The difficulty adjusted down massively to compensate. Then, as miners relocated their equipment to Kazakhstan, the US, Russia, Canada, hash rate slowly recovered. And when it did, difficulty shot back up aggressively. What we're seeing now in February 2026 is a smaller but structurally similar event. A temporary hash rate shock caused by weather instead of government policy, followed by an aggressive recovery. The difference is that this time, the recovery happened in just 2 weeks. That's how powerful and how concentrated the modern Bitcoin mining industry has become. There was also a notable difficulty jump on October 10th, 2022 at block 758,116, where difficulty climbed above 13%. So Thursday's 14.73% increase is now among the most significant upward adjustments in Bitcoin's recent history. We're in rarefied territory here. Second, what this means for miners. Here's where I want you to really pay attention, because this has serious financial implications. Right now, as of this week, Bitcoin miners are earning approximately $29.30 per petahash per second per day. That's called the hash price. And if you know your Bitcoin mining history, you know that $29 hash price is extremely low. In fact, according to data from Hash Rate Index, this is near multi-year lows. We're talking about hash price levels that haven't been seen since Bitcoin was trading at a fraction of its current price, essentially back when Bitcoin was in its infancy in terms of mainstream adoption. Think about what that means. Bitcoin is trading at significant dollar values today, yet miners are making the same amount per unit of hash power as they were when Bitcoin was worth far less. Why? Because there's so much more competition, so much more hash rate competing for the same block rewards. And now, with a 14.7% difficulty increase, those already razor-thin margins just got compressed even further. Let me put this in simple terms. Imagine you're a small business owner. Your revenue is already at the lowest it's been in years. And now your operating costs just went up 14.73% overnight. That's the reality for Bitcoin miners right now. For large, industrial-scale mining operations with cheap, long-term power contracts and the newest generation of ASIC hardware, machines like the Antminer S21 Pro or similar, they might be okay. Their efficiency is high enough to survive these conditions. But for smaller operations, older hardware, or anyone paying above-average electricity rates, this adjustment could be the difference between staying profitable and shutting down. And there's a real-world example of this dynamic already playing out. Soluna Holdings, a Bitcoin mining company, just announced an expansion, adding 6 megawatts of behind-the-meter capacity in Texas through a partnership with Blockware. Behind the meter means they're generating their own power, typically from renewable sources like wind or solar, and using it directly for mining, without going through the traditional utility grid. This is exactly the kind of strategic move that separates the survivors from the casualties in a high-difficulty, low-hash price environment. Third, what 1 zettahash actually means. I mentioned earlier that the Bitcoin network crossed 1 zettahash per second. Let me put that in perspective, because the number is so large it almost loses meaning. 1 zettahash is 1,000 thousands hashes per second. Every single second, the Bitcoin network collectively performs 1 sextillion mathematical operations just to secure the blockchain and process transactions. For context, if every single person on Earth had a laptop and ran it at full speed doing Bitcoin calculations, the combined power of all 8 billion humans wouldn't come close to 1% of the current network hash rate. This is why Bitcoin is the most secure computer network ever created by humans. The energy and hardware required to attack it, to try to rewrite the blockchain or double spend coins, is so astronomically expensive that it is effectively impossible for any non-state level actor, and arguably even for nation states. Fourth, the difficulty mechanism as Bitcoin's immune system. Here's the big picture point I want you to walk away with. What we witnessed over these past 2 weeks, an 11% drop followed by a 14.73% spike, is not a bug. It's not a crisis. It's Bitcoin's immune system doing exactly what it was designed to do. An Arctic storm temporarily removed a significant chunk of hash rate from the network. The protocol detected this within 2 weeks, measured the average block time, and automatically reduced difficulty to keep blocks flowing. Then, when hash rate returned, the protocol detected the surge, measured the faster block times, and automatically increased difficulty to maintain the 10-minute target. No central bank, no government committee, no emergency meeting. The code simply executed, mechanically, automatically, without human interference. This is what makes Bitcoin genuinely different from every other monetary system that has ever existed. When external shocks hit the global financial system, humans have to intervene. Central banks cut rates, governments issue stimulus, treasury departments hold emergency calls. Every intervention introduces new variables, new risks, new opportunities for corruption or error. Bitcoin just adjusts every 2 weeks, like clockwork, indifferent to politics, weather, war, or human emotion. So let's bring this all together. Here's what you need to take from today's video. Number 1, Bitcoin just experienced one of the largest 2-week difficulty swings in its history. An 11.16% drop on February 7th, followed by a 14.73% spike on February 19th, back to back in 14 days. That level of volatility in the difficulty metric is historically rare and signals just how dominant and reactive the modern mining industry has become. Number 2, the cause was a temporary weather event. An Arctic storm forced US miners offline. The moment conditions normalized, they came back harder. Hash rate blew past 1 zettahash per second, block times accelerated, and the next difficulty adjustment delivered a sledgehammer response. Number 3, miner revenue is at multi-year lows. Hash price is sitting around $29.30 per petahash per second. This is painful territory for the industry. The 14.73% difficulty increase makes it even harder. Inefficient miners and small operations will feel this pressure intensely. The mining industry is going through a Darwinian moment. Only the most efficient, best capitalized operators will thrive. Number 4, and this is the most important point, none of this is broken. All of this is working exactly as designed. Bitcoin's difficulty adjustment mechanism is one of the most elegant and underappreciated innovations in the entire cryptocurrency space. It ensures that no matter what happens in the physical world, storms, bans, wars, recessions, the Bitcoin network keeps producing blocks on schedule. It keeps securing transactions. It keeps running. And that ultimately is why I believe in Bitcoin for the long term. Not because the price always goes up, not because it's exciting or trendy, but because the fundamentals are sound. The protocol is resilient. The network is stronger than ever. Now, what does this mean for you as an investor or someone interested in the Bitcoin ecosystem? If you're a miner, watch your hash price. Watch your electricity costs. If you're on older generation hardware, now is the time to seriously evaluate whether it makes financial sense to continue operations or to upgrade. The industry is moving fast, and the margin for error is shrinking. If you're an investor in publicly traded mining companies, this difficulty environment is going to shake out the weak players. Companies with high debt loads, old hardware, and expensive power contracts are going to struggle. Companies with behind-the-meter power, modern ASIC fleets, and strong balance sheets are going to consolidate market share. Due diligence matters more than ever. If you're just a Bitcoin holder, zoom out. What you're watching right now is the network getting stronger. More hash rate means more security. More security means the network is harder to attack. A more secure Bitcoin is a more valuable Bitcoin in the long run. Short-term pain for miners is long-term gain for the protocol. And if you're completely new to all of this, welcome. You just got a crash course in one of the most important and least understood aspects of Bitcoin. The difficulty adjustment is not just a technical detail. It is the beating heart of the most revolutionary monetary technology ever created. And now you understand it better than 99% of people who call themselves crypto investors. Before I go, I want to give a quick shout out to everyone who's been supporting this channel. Asian Bitcoin Guy is growing because you share these videos, you leave comments, you subscribe. This content takes serious time and research to put together, and every like, every share, every comment tells the algorithm that this is worth pushing to more people. So if this video gave you value, and I genuinely believe it did, smash that like button. Subscribe if you haven't already. Hit the bell so you never miss when I drop new content. And drop a comment below. I want to know, do you think Bitcoin hash rate keeps climbing in 2026? Or do we see another major pullback? Let me know. I'm Asian Guy. This is Asian Bitcoin Guy. I'll see you in the next one. Stay sharp, stack sats, and never stop learning.